Well, good morning there, traders and friends right around the world. You're here with James on behalf of Pivot Point Trading as I sit down and bring you this pre-market update dated Friday the 30th of October 2015. This entire week, I've really been humming and hawing as to when it would be the most pertinent time to bring you an important market update. It has been somewhat of a dull week. If I quickly change to the weekly chart on the Dow Jones Industrial Average, the overall net movement for trading sessions to date this week has only been a net positive move of 109 points, considering that the market itself is up at 17,755. I've really been biting my tongue as to whether or not, or waiting for the market at least try and give us a reversal type of candlestick as we continue to push our head on back up into multiple levels of overhead resistance. Apart from Wednesday's nice little push on up higher, it has been somewhat of a pretty dull week, as I have already alluded to. We've seen the spinning top on the Monday, another continued spinning top on the Tuesday. We saw this nice little push on up higher on the Wednesday. Thursday, it was looking like we were going to give back a lot of Wednesday's gains, but we did close somewhat strong. It left us with, again, another almost what we call a hammer type of candlestick. It is some form of a spinning top also, again reflecting indecision. To me, it feels as though something is boiling. Something is slowly simmering under the surface of this market, which is going to take a lot of people off guard when in fact it strikes. This has been one of the most emphatic, one of the most harshest rallies I have seen in quite some time, considering that at the beginning of October, where we started the month, we were down at roughly 16,000. Here we are 1 month later, up 1,775 points. It has been quite an interesting bullish little move. Now, during this entire bullish move, if I change to some of my templates over here, we have been once again expecting this slope of hope rally to set up, but ultimately fizzle out when we started to push into this red box. And also, as we started to influence and interact right around that 200 simple moving average. Now, what it appears to be doing right now is pushing its head above that red box and also, again, breaking substantially above that 200 simple moving average. You can see on my screen right here, it's looking as though we have back tested it and we're starting to push off from it. But the biggest red alert which I can see out there in the market at this particular moment is the fact that this market is extremely overbought on varying timeframes. If you have a look at the stochastics, if you pay attention to the RSI is actually turned. The MACD is still giving us some form of a positive momentum higher, but at the same time, I haven't seen a market this overbought in quite some time. In fact, what I have done prior to this little update, which I'm bringing you pre-market on Friday the 30th of October, is go back and just count how many times the ADX has been this overextended on both a bullish or a bearish swing. And if I zoom out all the way to 2011 and count the number of peaks above this horizontal line over here, there has only been 5 instances where the market itself has been this overbought or this oversold before we have reversed. And the biggest point right now is that although we can acknowledge that this has been a very powerful move on up higher, it would be very, very foolish right now to jump into a bunch of trades right at potentially the end of the upswing, or at least the first move of this correctional move higher. What I also wanted to address as at this Friday is that it has been somewhat of a slow week in terms of individual trade setups. I put my hand up and I acknowledge that. There's nothing that I can really do when it comes to speeding up the process of legitimate trade structure and jumping into trades which I feel comfortable about. However, this week has really added to the structure which is built in a lot of individual trades. I am feeling much more confident in a bi-directional setups on multiple stocks, which I will cover tomorrow in Pro, that has got me somewhat optimistic for the week ahead in terms of legitimate price action and making a little bit of money in the market, because we have been pretty much standing on the sidelines during this bullish move higher because risk has been on. Risk has certainly been on. It's been a very risky time to be jumping into individual trades. And when you look at our top 12 individual trade lists in terms of breadth, so the overall strength of our list over here on the left-hand side of my screen, we haven't really missed out on a lot of trading opportunity. And if we have missed out on trading opportunity, it's been for the right reasons. It's been because the trade hasn't confirmed. It hasn't really set up a legitimate trading plan, or at least a trading option in terms of a target, an entry, and of course a stop, which really warrants us, or at least gives us some peace of mind before we start entering into trades. But I'm not going to go through those individual top 12 trades now. I will say that we are blessed with an abundance of trade opportunity. And on top of that, if CVX doesn't report either horribly bad earnings, or it doesn't miss expectations, or if it doesn't significantly beat earnings expectations, this may be potentially one of my favorite trades upcoming. So starting Monday, it will be the beginning of November 2015. Mostly, very much so, a more profitable month than it has been in October. We have been very much passive throughout the entire month of October. It has been some form of a wait and see. But right now we're getting to the point where a lot of these top 12 stocks are ready to move. There's enough trade analysis and enough structure in them which warrant us legging into a lot of these individual trades. I will bring you a very comprehensive update over the weekend. But again, just to recap, in terms of... pardon me, there goes my cough. Or here comes my cough back again. But in terms of individual trade analysis in the market themselves, the Dow Jones Industrial Average up 109 points as at really before the market opens on Friday. That is a very small move in terms of where this market is positioned in terms of price. Again, 17,755. The S&P 500 is only up 14 points. So it looks as though once again this move is starting to exhaust itself, whether it's going to be for a long-term correction or just some form of a short-term pullback where we establish once again a higher low. None of our weekly trades have triggered below 17,478 on the Dow Jones Industrial Average. I'd be surprised if people are in diamonds at the moment. And again, the Nasdaq, this has been one of the most relatively stronger markets of the three, up 42 points on the weekly candle. This is now the daily. I'll change back to the weekly so you can see this. 42.4 points on the weekly. And the other market which I was covering early in the week was the Dow Jones Transportation Average, and speaking about the potential of a breakdown below 7,967. Well, this hasn't happened. It looked like it was going to test this level on Wednesday. Tuesday, we saw that big reversal candlestick, that long day Morobozu, off from this extended trend line which we have set up really since the beginning of 2015. If you take a look over here since February, it looks as though Wednesday and Thursday we are treading water. Volume has come out of the Dow Jones Transportation Average, even on this little 2-day bounce over here. Having said that, this is some form of a little 3-day reversal candlestick pattern. It looks as though it is a Morningstar reversal, but at the same time, it's not a textbook Morningstar reversal either. So, I mean, very neutral analysis on this trade, on this market, I should say, much like the overall and individual trade setups, which I will be speaking about tomorrow. I'm still very excited, though, about the Dow Jones Transportations continuing its move off from Tuesday. We'll just have to wait and see as to whether this works out. Two little stocks which I want to recap very quickly. Amazon has broken above 622.80. Volume is pretty solid at the moment. Again, this trade has sort of jumped the gun, but at the moment it is profitable. It is up $4. Not the most compelling trade setup. It looks as though we were setting up what we call an exhaustion gap when we got the earnings report. A very bearish day on the actual report itself. But for the past 4 trading sessions, we have seen price continue. And it is a very simple trade idea, very simple trading plan in terms of risk and reward. You can see Amazon pushing above 622.80. This is a continuation in the direction of the earnings gap, even though the candle itself was potentially showing what we call an exhaustion type of gap. Outside of that, we've got IBM again. We flinched below 139.06. We saw a little bit of a bullish rally, stage on Wednesday. Lower volume. Have a look at the volume compared to the breakdown candle on the Tuesday. So pay attention to this. On Thursday, we saw a doji, an inside day doji candlestick. So it is slowing right around the support level. If this support level cracks, and you can put in a little trade entry about 137.05, well, then you've got an incredible target down to 127.04. So though we have seen a little 1-day bounce between Wednesday and Thursday, or Tuesday and Wednesday, no matter what you want to call it, it's not a tweezer bottom. It's just this little counter push on up higher, back up into support. And it really looks as though this stock in particular, IBM, if it fails at this location and it breaks 137.24, you either have a fantastic opportunity to start opening up new puts if you're not in it, or to add to existing puts on IBM. Because if I change out to the weekly chart over here, you can see all of this white space where the next support level doesn't come in until $126 a share. So you can see right here, even from these two shares, and these are the only two shares really which have triggered this week, one's bullish, one's bearish. The market itself is very neutral. It has been very strong, but we are pushing up into varying resistance levels. I've just really struggled to sit down and just bring you any compelling analysis as to what this market wants to do right now, or what intentions it has for us. As we've sort of progressed into the week, it's really been sort of a fizzling type of market. We've had that Wednesday push on up higher. It's fizzled again on Thursday. And unfortunately right now, we are a little bit shallow on trade setups, but we have fantastic structure brewing. And I am excited for next week in terms of bi-directional setups on a lot of our top 12 shares, which haven't already triggered. CVX will bring to an end once again of earnings season for us, so I am excited to say goodbye to earnings season. It's always a little bit of a hindrance. It's always somewhat frustrating because we can see a lot of great trade setups, really permit us to start setting up contingent orders, but then earnings come along and unfortunately it gets in the way, and we're just not sure what will happen in terms of the gap, whether it will be bullish or a bearish gap, and that really stuffs up sometimes a lot of the trade analysis. So I am happy to say goodbye to earnings season and just to move on forward into November and December 2015 and figure out again where this market wants to go. Outside of that, ladies and gentlemen, traders and friends, market enthusiasts right around the world, it is James signing off on behalf of Pivot Point Trading. Again, I'm very excited and humbled to bring you this weekend's pro, a lot of fantastic trade setups. I'll bring you more information and detail in that class. Outside of that, have a fantastic Friday, and I will see you tomorrow in that recorded class online. All the best, traders and friends. Have a fantastic Friday. Goodbye.